for those reasons and the inflationary consequences of these Fed policies, at some point fixed income, is going to look less and less attractive given the tiny coupons offered in Treasury securities. And so at some point, the Japanese, the Chinese, the Koreans, et cetera, are going to be increasingly less interested in buying our debt. I think it's interesting now that we're going to be offering more tips, as is Australia, to accommodate Chinese demand. So there's the earliest sign of them they're willing to take the currency risk for now, I guess because they already have it, but they'd rather have tips than, say, 30-year treasuries with a fixed coupon. And I think this is the early days of it. I don't see how we get around this. We're going to have these tremendous pressures for the Fed to print money and for government stimulus. Meanwhile, we've got these massive deficits, and we're not even offering anyone a fair return. We're expecting them to take these ridiculously small coupons. To me, is sort of almost preordained, as was that the housing bubble would lead to a huge bust, and same with the equity bubble. I mean, this seems preordained that we're going to have some sort of a currency crisis whereby it'll become more incumbent upon the Fed to print up money to buy the bond, and the fear of that will cause the dollar to do worse, and it'll all feed on itself. When is that going to start? I have no idea, but it just seems to me nearly unavoidable.
From Mark's newsletter, you quoted in your piece, deflation can be avoided through debt and money printing. This isn't to say that I support such policies or that I find deflation to be bad and inflation to be good. But the point is that if a government is really determined to inflate its problems away, it can be done. So whereas near-term deflation is a distinct possibility, in the longer term, inflation is more likely because of several factors. When the economy recovers, and the recovery is likely to be fragile, the Fed will be very reluctant to increase short-term rates. Another reason for the Fed's reluctance in this respect will be the size of the government debt, given that higher interest rates would increase the interest burden. Therefore, I can't imagine any scenario under which the Fed wouldn't keep interest rates at an artificially low level as it did post-2001. That such monetary policy, combined with the growing fiscal deficits discussed above, is more likely to lead to inflation rather than deflation should be clear, end quote. Mark's case makes a great deal of sense to me, and you wouldn't have printed it if you didn't believe it had merit, Bill. What are your thoughts on this? Because last time I interviewed Mark, we were talking about the fact that there is inflation already right now, and Mark was quick to point out that that was occurring in the weakest economic environment since World War II. So what are your thoughts on that, Bill?
Well, I chose to quote Mark rather liberally because I thought he said many things so well and succinctly. I've been writing about these outcomes for so long, sometimes I can only say the same thing so many times without boring people. And Mark, the way he turned his phrases, I thought was quite well done, which is why I wanted to share it with people. And all I can say is I agree with him, and it just blows my mind that people continue to fret about deflationary outcome. Obviously, stock markets had a collapse, recovered some, the real estate markets collapsed, but it was never these collapses that were going to be the final outcome. The final outcome was going to be the response to those collapses, which was money printing, and all the responses are the kind that debase your currency and ultimately lead to inflation. And for all of the talk of deflation, and some prices are going down, there are still prices that are going up, even in a weak period, as Mark notes. So Mark is much more convinced at this moment that we will end up at hyperinflation. I'm not convinced that is unavoidable, though higher inflation is a slam dunk. Sayings I have on the masthead of my website is, in a social democracy with a fiat currency, all roads lead to inflation. And in my 30 years in the business, every time there's any sort of excess, people always fear that the consequences will be deflation. And yet it's like they don't understand that this is just confetti that we call money, and they're going to print more of it. And it's really hard to have a final deflationary outcome when it's just so easy to print up script.
Also from last week's piece, however, I am more certain than he is that the maximum deflationary pressures have passed. The policies of the Fed and other central banks are why I continue to advocate that folks own the currency with no central bank to screw it up, gold, end quote. I thought your first sentence so interesting and wanted to ask you, Bill, about your view that the maximum deflationary pressures have passed. Would you mind elaborating on that a bit?
Yeah, I just think that, we've seen a huge collapse in housing prices, which obviously impacts the prices of items that go into housing and service and those sorts of things. We saw the stock market decline, and we've seen a lot of layoffs from that. So a lot of the deflationary pressure has, the big disgorgement, if you will, has taken place. Plus, I think a lot of businesses cut back to a level that was even of lesser economic activity than what we're actually experiencing. So perhaps we overshot on the downside in various different ways. So I think that now the consequences of money printing can start to be felt. And a lot of times inflation comes through in form of new local taxes. I mean, the government talked about having these pressures, and their response to that is raise the cost of services. I mean, look what's happened to a postage stamp over the years, to pick one silly example. So there are lots of ways that inflation works its way through, and it doesn't necessarily have to print in the CPI. And in fact, the CPI, for reasons that I talked about in the book that I wrote, is the last place to show inflation. Given hedonics and substitution, the CPI is always going to be the last place to show it. But one of the important things is psychology. A lot has to do with people's attitudes. You know, if they think there's going to be more inflation, then they start to behave in ways that cause it to heat up. And if they're sanguine about the prospects, it can just kind of like sort of be kind of at a low level for a while. But I think that the chances to have across-the-board price decreases where the dollar actually buys more across the basket of goods over a year or two's time, which would be my definition of deflation, is extremely unlikely to occur going forward. Not until such time as we have dollar crisis, dollar funding crisis, whatever you want to call it, and the Federal Reserve is not allowed to print money. After that happens, then we could see deflation, but we're a long ways from that. If that happens, I should say.
Bill, you mentioned in your piece last week about the $50 million fine GE agreed to pay for their accounting fraud complaint, and that follows news that Bank of America agreed to pay $33 million to settle a similar charge. Before we go on, I just wanted to play a clip from an interview I did with Harry Markopoulos, who broke open the $50 billion Bernie Madoff Ponzi scheme, and then I'm going to ask you to comment, because I can't just do this with anyone on the show, but you are uniquely qualified to comment because you have followed these types of situations.
And reinstill moral hazard into this nation and take us away from socialism and back toward capitalism and free and open, transparent markets. And that's the only way to do it, because the government's lying to us now. They're not supporting mark-to-market, and so they're basically giving the green light to the banks to lie about their balance sheets once again.
Correct.
And keep in mind that there's two balance sheets that every bank has these days, the big ones. They have one offshore and they have one onshore. And the leverage ratios that you see published, like 20 to 30 to 35 to 1, it's not true, because they're not bringing the off-balance sheet contingent liabilities onto those onshore, on-balance sheet.
But aren't they also accrediting goodwill now? And so it's it's phony. The books are phony still.
The books are cooked.
Okay.
And supposedly Sarbanes-Oxley eliminated the cooked books, but now we're giving green light to the CEOs and CFOs to sign off on a set of cooked books. I don't believe those bank balance sheets one iota. And the government's green lighted them, and they threatened FASB and said mark-to-market, the banks don't have to do it any longer. Mm-hmm. And that just tells you that the government's supporting the big lie.
A line from your piece last week that summed it up, quote, regretfully, this is what I've come to expect from the government. Why is the government engaging in and encouraging this type of fraud, Bill? Wouldn't this normally be considered criminal? And what is really going on with the bank's balance sheets? How phony are they?
Well, as I've said about banks for 20 years, they're just leveraged black holes. You don't know what's in them. The FASB is part of the problem. I mean, it is a complete joke. My college daughters, I tell them that they got to take one accounting class, and after one accounting class, it's all about how to lie with financial statements. You know, I mean, that's a bit of an exaggeration, but this is 20 years in the making. You know, a little white lie here, a little mischaracterization over there, but financial markets always go up and things get better. I mean, it's a socio-economic phenomenon that's taken a long time to create, whereby in the midst of the depths of the stock market lows last March, it wasn't too long thereafter when they talked about suspending mark-to-market. Part of what the mark-to-market phoniness was part of the reasons we got in this problem. They talked about suspending it, and bank stocks rallied. So there continues to be, amazingly enough, a willingness to suspend disbelief about many of our problems. I think folks want to have a happy ending. That's the problem when you monkey with the business cycle, as Greenspan did, and you go so long between recessions. You don't sober people up. You don't have people demand better accounting before it's too late. And so it becomes easier just to kind of perpetuate the lie as long as you can. And so I don't know how bad these financial entities are. You really need to be an expert. But again, the financial statements don't mean that much, although I'm sure they're better now than they were. So many of these companies have gotten more capital, even though they got it from the government. But these zombie institutions, I mean, there should be some rules as to how long you can have TARP money, and if you can't pay it back in a certain amount of time, you should just be closed down. And as for paying big bonuses to people at these organizations, I don't know if you're on the government dole to be able to keep your doors open, why should you be able to pay bonuses? Because if it wasn't for the government, you'd be closed down. And the talented people can go to institutions that are capable of surviving. And this whole concept of quasi-socialism, quasi-capitalism has all kinds of problems associated with it.
One more clip from Harry's interview I'd like you to comment on, Bill.
Because I think some of us, when we looked at the SEC, kind of looked at it and went, this just looks like an old boys club designed to protect, hired by Wall Street to protect Wall Street. It's not functioning the way it's supposed to function. It's hiding this stuff. It's not uncovering it. It's almost a joke. Is that fair to say that the old SEC was like that?
I would say that the SEC was very